Hello there, this is fairbinaryoptions.com, and what I would like to show you on this Euro and Australian dollar 4-hour chart is how to integrate a falling wedge strategy when trading binary options. Now you all probably know that one of the simplest concepts in technical analysis is related to falling or rising wedges or wedges in general. It is well known that a wedge that is falling is going to break to the upside. A classical wedge looks something like that. So I will just illustrate to you how a wedge would look like. This is a falling wedge, and normally a falling wedge, it is being said it is rising, so price will break to the upside, and the rising wedge. Okay, let's say that this is a rising wedge like this, should look like this. And the rising wedge is supposed to fall. That means price should break to the downside. Now this is the classical wedge, and what you're seeing here on the 4-hour chart, it is a bit zoomed out so we can see the whole picture. But after we will have the wedge, then you will see we will go a bit into more details. Now our falling wedge here seems to be this structure here, and the falling wedge is a reversal pattern, and this falling wedge looks like this, goes from here to here like this, and from here, let me change the color so that we are actually seeing it better. Something like that. So this is the lower part of the wedge, and the upper part of the wedge comes from here and goes all the way to the downside here, like this. Now, as you can see, this is a falling wedge that just broke to the upside. On the falling wedge, it is rising. Now, in terms of Elliott waves, if you are trading with Elliott waves, any wedge, it is being part of an ending diagonal structure. I mean, most of the times, and this should be labeled 1, 2, 3, 4, 5. So from here, you should label 1, 2, 3, 4, 5, as you very well know. Now let's label this one, because you will see what I want to show you. So 1, let's make it I don't know, red. So this is 1, the first wave to the downside. Then this is the second wave here. So 1, 2, then a 3 to the downside, then a 4th here, and then a 5th to the downside here. So I wanted to show you that a rising or a falling wedge in our case here travels between 5 waves, 1, 2, 3, 4, 5, and the visible thing that you can use when you trade binary option is that it doesn't make any sense. In this case, you want to go to buy calls because you are expecting price would actually go to the upside. So it doesn't make any sense in engaging in buying calls here or here or here or here. Your first clue should be to wait for this. So to wait for this trend line, the 2 to 4 trend line, to be broken. So let's write it down here so that you're having in front of your eyes. Wait for the 2 to 4 trend line to be broken. It is exactly the same what's happening in a rising wedge. In a rising wedge, the 2 to 4 trend line will still be the trend line to the downside. So wait for this trend line to be broken. It is usual for wedges to be retested after price breaks. Here, this one is almost retested. If you draw the trend line a bit like this, okay, you see that it is broken, almost retested, and I would say that it would not go better than this. So this is the classical falling wedge. In order to evolve in trading binary option, you should wait either for a retest here or for the breaking of the 2 to 4 trend line. And in our situation here, so falling wedges are rising and we're looking to buy calls. This is a 4-hour chart, and this 4-hour chart, you'll see now the reason why I wanted to see the whole picture, because in terms of Elliott waves, for example, this is the marginal high, the previous high that we have here, approximately that at the 150 level, and then price did what? So price goes to the downside here, makes almost an impulsive move here. Why almost an impulsive? Because this doesn't look like an impulsive move, looks like a corrective move, and then it goes to the downside from here. Sorry, this implies that the whole move from the highs here to the lows here is corrective, and now we are looking for a move to the upside, not only to go, I don't know, for here 10 pips or 100 pips, but we are looking for the whole distance to be traveled by price. In order to trade binary options, you very well know that the most important thing to do when you trade binary option is to choose your expiry date. Your falling wedge here might be extremely good, might be valid, but if your expiry date is not helping you, then you might have a losing binary option, even though your strategy was being right. So after 2 to 4 trend line is broken, retested, the logical thing to do is to buy calls. So we are looking to buy calls, and depending on the broker you are dealing with, here in binary options, in fairbinaryoptions.com, we are recommending a lot of brokers. But depending on the brokers you are trading with, I would go for a high-low, so buy calls, a high-low binary option, buying calls. Let's say here, so buying calls. Even though if you look at the closing this Friday, that it was quite high, we are not looking at such a short time frame, but we want to buy calls, so buying calls for 1 week expiration date, or depending on the broker that you are dealing with, if you don't have 1 week, because now it is the 21st, as you can see, the 21st of September. So maybe you're not having a 1 week expiration, let's say, but you might have for end of month expiration. So for the 30th of September, I would do that too. So buying calls for 1 week expiration, or buying calls for end of month expiration. This is our recommendation. This is what one should do whenever is trading binary options and uses a falling or a rising wedge. Thank you very much for having me, and keep in mind that this is fairbinaryoptions.com, and our official sponsor here, Lionive, is the one that helps us having these regular recommendations. So thank you again, and bye bye.